Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway here at verifiedinvesting.com. And of course, we're going to get into the nitty-gritty chart and data analysis that's going to give us potential trading setups for the day today. All right, first off, we had some big action yesterday in the afternoon. Names like Palantir collapsed to the downside. SMCI, which had been ripping all day long, gave up a massive chunk into the end of the day, putting in a doji and possible top. In addition, this morning, Walmart earnings disappointing, really their guidance. But the biggest thing here is, does this signal that the middle to upper end consumer that's been kind of keeping Walmart afloat, that's been trading down to Walmart, is there an issue there? Are we starting to see the consumer spending across the board starting to taper off? We know what comes next after that. All right, follow me over to the big board here. Let's take a look at what the S&P is doing this morning. We are trading slightly lower. So this was your 10-minute chart yesterday. So again, markets opened a little bit lower yesterday, but remember, we had confirmed above that major technical support. So it had a neutral to upside bias. Sure enough, what happened? We traded generally higher on the day into the close. Then we can see that in the after hours, we trailed down, and this morning we are continuing to trail down just a little bit. But having said that, are we still above the baseline here, this 610-ish, 609 and change level on the SPY? The answer is yes, and it is still a confirmed breakout, which means probability-wise, it still favors the upside, all right? So again, remember, doesn't matter what I think, what I feel, it's a matter of what the charts are giving us in terms of probability. And if we follow that, if we ignore our emotion, if we ignore our hopes and our dreams for whatever trades we're in, we will ultimately make better decisions because we're going with what the charts are telling us, which again, if we read it correctly, gives us probability. Okay, so here's your daily chart. We can see very clearly on the S&P. Here was your high from December. We know that again, it confirmed above this level right here. Yesterday, we got a little bit of an up move there, which basically should be expected based on confirmation. Today, again, we're trading down just a little bit off of yesterday's high. Now, what the big thing for me is going to be is to watch. So Palantir took a major dump yesterday on some insider major. The CEO basically announcing he's going to be selling, I think, 10 million shares or whatever it is. In addition, Trump announced major cutbacks at the Pentagon, which could affect contracts that Palantir has. Obviously, that stock dropped over 10%. It's basically fractionally lower this morning. But the bigger question with Walmart, again, as I said in the early intro, is that are we seeing a crack in the consumer overall? We already know the low-end consumer, right? The low-income consumer can't even go to Dollar General anymore almost. I mean, it's really crazy how bad it's gotten for the lower income. But the middle to upper income with investments in the stock market, they've been doing okay until maybe now. And the reason you could say here, if you look at the stock market all the way prior, right over here, it was always going up, small pullback, higher highs, continuing up. Since December, it's gone sideways. And so people are looking at their 401k statement and saying, wait a minute, you know, I'm used to making 3-5% every month on my portfolio, and really since December, I haven't made anything. Does that mean they're starting to pull back, especially with inflation going up? So the stuff they are buying, it's costing a little bit more every month, but at the same time, they're not seeing their net worth go up because the stock market has stalled out. So these little things, again, they're very, very important for us as technicians to keep an eye on. They're little pieces of the puzzle that can go in and explain why we're seeing lines and levels on the charts. All right, looking at the QQQ here, the Qs are down fractionally this morning. You can see, again, we're right at our double top high. So S&P really technically is leading here versus the NASDAQ 100 because the S&P is already above the here on the breakout with a confirmation of that versus the QQQ is still below. We know some of these charts and what they've done. Here's your chart on Palantir. This is the 10-minute drop in the late day session. Look at that drop from $124 down to about 108 and change. Last candle of the day yesterday, it popped back to 112. And then if we flip to the pre-market, you can see it is continuing to stay lower. We're trading just below 110 right now. On a technical trading basis, the level I have is obvious here. Today is a day trade. I will be watching the 100 even number. You got the even number, and it's the gap window. Gap window means that you closed one day here and you opened here. So gap fill is when this level fills. Gap window is the low, or essentially, so this is the top of the window, the bottom of the window, Closing the window fills the gap. This would be your gap window here. All right, so again, 100 even number for a tradable level, yes. Then if it gets through that, you have a lot of downside until you get back to about 83.75. Gap fill would be major support. SMCI today, folks, take a look. Yesterday, we went right up to this level right here. Right in that area. We kissed it and then had this big sell-off yesterday as well. There's your big sell-off when Palantir came down. Now, again, one thing I want to point out here, and this is a very important technical point, is that it's not like SMCI had bad news, right? They didn't have bad news. It's because Palantir and SMCI share something in common. They're both momentum trades, okay? In addition, HIMS, right? HIMS and HERS, HIMS, that's a momentum trade. You can see how it faded as well on the charts. And so it doesn't necessarily mean that a stock has to have bad news to go down. It's more that when a group of momentum names, if one starts to tank, it will inevitably pull back on the others as well. And that's what we saw here on SMCI, which was extremely overdone. Pre-market SMCI down a little bit. You can almost make out a little head and shoulders here on the charts. If we go back to the charts here, guys, you can see right here, shoulder, head, and shoulder. This here is going to be a key break point. If we get below 55.70 on SMCI, you probably see further downside towards $50, the even number level here. Now, $50 today, maybe just below. There might be a buyable level there for a day trade. I'll have to keep that on my radar in the Apex Live day trading room. But again, here's your shoulder, head, and shoulder. The neckline break point for a breakdown is pretty obvious. It would be this flat line right here, this low to this low. If price violates and gets below here, that opens the door for probably another $5 drop on SMCI. All right, Rigetti this morning is popping a little bit here. Nice little move up on that stock. This stock has kind of been languishing. This one used to be the hot runner. Then it had that big correction, and now it's kind of just been chopping. Today it is up decently after closing at 11.03 yesterday. It's trading at 12.07, so about 10% upside. This is on the back of Microsoft announcing a new mega computer, supercomputer breakthrough. Now, Microsoft's only up fractionally. In fact, it's basically flat pre-market here. But the idea, again, is that any sort of new supercomputing chips, what is that going to do? It's going to basically mean that you have more focus on supercomputing stocks, and so those are just naturally getting a bid. Essentially, those are coming back in focus. They were out of focus. It was to Palantir, to SMCI, to the semiconductors. We saw NVIDIA pushing up recently as well. Now it's moving back to the supercomputer chips, and so on and so forth. All right. Next up, Carvana, guys. Carvana getting slammed on earnings. If you watched Trading the Close yesterday, I gave you the level that this would have as a max upside. If we go to this chart on the daily chart, look at this. This was my beautiful parallel. You guys know I love my parallels. And I said to you guys, all right, it's up like 50%. Just from the low here on January 3rd, right? So the stock was overbought already. And I said, listen, on earnings, they might pop it into this trend line here at around 305, 304, but then look for it to drop because that's, again, historically, look, down. And again, over here, up off the bottom line, up off the bottom line. So this we can, essentially extrapolate to that this should be a sell-off. Well, if we go to the 10-minute chart, look at initially popped, piercing that level, and then look at the drop from this high. And again, by the way, some people in our earnings trader, which is part of Smart Money stocks and ETFs, they actually shorted right into this level right here, and they made a boatload of money yesterday. So from this high yesterday after hours to this low 20% drop before bouncing back a little bit, that's the beauty of charting, guys. Again, it's not perfect. I'm not going to pretend it's perfect, but it's pretty darn cool. All right. So quickly going to Bitcoin. I'm going to move over to the big board. We'll talk about Bitcoin on the big board today. If we look at this, we can see that it's still stuck within its range. The positive for Bitcoin, it's starting to show a little bit of life here. Very preliminary. I'm probably making a mountain out of a molehill, but nonetheless, it is upticking. The one thing you're watching for, if you're talking about a shorter term trader, you can see that the highs right across here, right in this range, right? So right in here, that seems to be where it keeps popping into and getting rejected. Just like to the downside, there's a pretty obvious area right here. So you almost have a bigger two lines, trend lines, resistance and support, and then within that, this little range here. And so my point of bringing this to your attention is that if somehow you can get Bitcoin to get, let's say, above 98,500 or so, there's a possibility at least it could start to make its way up towards that level. But as of now, it's not there yet. Watch that area, 98, 98.5, right in that vicinity. Likewise, you can see again, it keeps coming down into this line and then bouncing up. So you would watch for a break here, which then could send it down into this support. All right, so again, just a kind of a level within a bigger level on the Bitcoin chart to kind of keep an eye on. And again, I would just like to point this out is that Bitcoin remains about 15% off its all-time highs, while the S&P made a new all-time high yesterday. So there is a little divergence in crypto. For those of you that are new that are tuning in, just to explain that, it's basically you had so much hype and so much excitement from November when Trump was elected, and Trump, we know, has been favorable to crypto. So from November to his inauguration in late January, and now he did a few things for crypto, but there's now this void. This area where the crypto market or interested investors are saying, okay, well, you know, that's all done with. What's the next catalyst to create the run? And so far, we don't have anything. I mean, MicroStrategy / known as Strategy now, they just announced they're going to be doing another $2 billion offering or whatever it is to buy more Bitcoin. That's their normal. They're just going to, I think in all fairness, they're just going to continue to buy Bitcoin. The market seems to ignore that. But really, investors in crypto are watching for what is the next catalyst. As long as there's no catalyst, it's going to be really hard to get momentum on Bitcoin, even with the stock market trading at all-time highs. All right. Let's go beer. We're going to take a quick look at the gold chart today. All right, so the gold chart here was making a new all-time high overnight. You can see a little pop here, getting closer and closer to 3,000. It is now pulling back. And just to be crystal clear on this, your doji high, which is only a minor bearish signal, is still intact. You have not had a daily close above it, so therefore probability slightly favors the downside. In fact, let me go explain this on the big board. Okay, so understand this. This is a doji. Why is it a doji? Because you have a tail on the bottom and a wick on top, and price closed somewhere in the middle. If price had closed in the lower 25% of this candle, like down here, then it would have been a topping tail. Topping tails inherently are stronger bearish signals than dojis, right? So dojis are okay. You know, it kind of gives you a little bit of an idea of what the potential price direction could be based on probability, but it doesn't give you an overwhelming odds versus a topping tail does. And so what we have here is we have a minor downside bias in gold, which would be negated just like a topping tail with any daily close above the high of that doji. So right now, again, slight negative bias. You can even see it kind of working its magic, how you keep coming up underneath. Here's a pierce, here's a bigger pierce, and price still gets rejected on gold. So just again, I always like to talk about probabilities, right? I speak in data and probability terms, but I like to even dissect what a topping tail is probability-wise from a doji, and the difference is there. Same thing with like a gap or a gap fill versus a gap window. At least for me in technical trading, gap windows are solid levels of support or resistance. Gap fills are very solid levels, right? And so there's varying degrees. Essentially not every factor is created equal, and that's important for us to know when we're calculating probabilities. Okay. Let's go quickly to silver. Silver, again, as I've talked to you guys the last couple days, has been kind of a mixed bag. Silver is up a little bit here. Again, it's kind of creeping up, but you still have this bearish sign right here. So yes, bullish pattern here, starting to inch up, but this is still intact. A close above, let's say 33.40, then you're talking about a full-fledged move up probably to 34.80. Next up, oil. Oil has been quiet since we got out of our short down here. It's been creeping up little by little on a daily basis. We'll get oil inventories today as well as natural gas inventories, but really not much action here. And then natural gas has been the big mover. And by the way, notice how for the longest time before this natural gas move, natural gas was kind of dead, right? There wasn't a whole lot going on, and we had to be patient for a bigger move to come, right? And so now we have that bigger move. As I said yesterday, I added to my short, and ultimately now we're getting a pullback right off of this secondary level. We never confirmed above the parallel channel, so that's also key. And we also kissed the gap fill here. There's a gap over here. Let me show you and zoom in on this because I think this is important. You don't get gaps very often like this in commodities. It has to be basically from a Friday into a Monday. But here's a gap right here, and that gap fill was kissed. We didn't officially fill it, but it was kissed, and that is additional resistance. So the point being is that on natural gas, there's a ton of resistance up here, and nat gas is starting to come in. First support on nat gas is going to be right here. You can see that area right here, pivot highs right across here. So you're looking at around 390 as first support. If that breaks, then you could head to the low end of the parallel there. But first off, you got to expect some support around 390 on nat gas. All right, guys. So listen, we got to go into Walmart real quick. Guys, I want to make sure we cover Walmart on earnings here. So again, what we could see, Walmart is actually has bounced back. It was trading at $94 and change. So it's back to 99. But look at this, guys. If you saw this chart, right, and let's go to the intraday here. So look at that drop and look at this bounce back. But look at that drop there. And then I want to look at this, and I want to go to the big board and just dissect this real quick. So a couple things. And by the way, I've talked bearishly on Walmart for the last couple weeks, no doubt about it. But let's talk about why did probabilities favor a drop on earnings today? Simple. Right. So number one, let's talk fundamentals. I'm not a big fundamental guy, but I pay attention in rare cases. Walmart, which is a retailer, was trading at a 40 multiple, PE forward multiple, price to earnings multiple of 40. That's basically more than most tech stocks are trading at. There are very few tech stocks that are trading at a multiple that's greater than Walmart. Using logic, and I'm a big fan of logic, does that make sense? Not really, right? I mean, they're not creating the next AI chip. They're not creating the next crazy AI software. They're not creating the next supercomputer chip or anything like that. So really, they're like, yeah, you go and do some shopping there, and sure, people that are struggling have traded down to Walmart, which is fine. But at the same time, do they have the growth to justify a 40 multiple? And the answer is no, they don't. So you knew it was overbought already on the fundamental side. On the technical side, it's up like 50% plus in the last year, which again is very unlike a Walmart type scenario. And more than anything, you have the trend lines, the parallels, right? So you have the parallel here, and right here you can see what happens. It sold off. Then off the lower end, it rallied up. And what did it just hit in the last couple days? The high of that parallel. And guess what? Pre-market, we were actually trading below that. Now they've recaptured that parallel. I actually think today, I wouldn't be surprised if it does close on or below. And I actually think this is going to confirm to the downside and continue down. Because again, even at the current, like even taking away, basically it's only down $4 or $5 right now, about 5%. It's still trading at like a 38 multiple. That they warned on guidance, which by the way, as I mentioned, it could be a sign that even the consumer that's trading down is starting to struggle. But either way, no way to justify that based on their guidance where it currently is trading. So essentially, this would be for me, any sort of bounce off of this would be a shortable. Here would be your gap fill right up here around 104. Eventually, I think it's coming down based on technical analysis there. All right, guys. So lots going on here. We do have Michigan sentiment today, I believe. That'll be coming out, I think, is at 10 o'clock. So that could be interesting. Some PMI data there. So we'll watch that. But overall, we are watching Walmart, Palantir, SMCI. Even Rigetti is in play today. Carvana is in play. We'll watch to see what Carvana does. It has to go down probably to about 240 before it starts to get interesting on Carvana. I'll be trading that with my traders in the live day trading room as well. All right, guys. I got to get going. I got to get to the trading room, start prepping for the day and for the trades. Thank you guys so much for tuning in. I'll see you tomorrow. Take care.